You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan and welcome to our Masters in Trading Live. Masters in Trading Live, we get on here every single day, 11 o'clock a.m. Eastern, to go over the market. Now, I'm going to look at the market most likely different than you've seen in the past. I'm a big believer in the creative trader wins. We want to look at things from a different perspective. I specialize in buying options. The cool thing when you buy options, I like to think of it as, would you rather risk $1 to potentially make 5? That's buying options. Or would you rather risk 5 to potentially make $1? Now, think about those two. For a full year, if you were risking $1 to make 5, or risking 5 to make $1, even if you had the same outcome, I've definitely concluded that is much more pleasurable way to live, learning how to buy options. It's just a little tricky, so you have to learn how to do that. So when we have movement like we do right now, that's what we're looking for. We build into positions, wait for the market to move, and then we want to take off big profit. So let's go to the slides and let me show you what we've been able to do today. Okay, stock market news. Dow jumps 300 points on CPI. We have the Fed rate decision later in the day, so volatility is just starting for the day. Market is up, rate cuts odds increase after CPI data. Expect more volatility today with the Fed announcement. We talk about the VIX. We talk about the VIX often. We talk about the VIXs. VIXs, VIXI. It's like fish. We talk about the fishes. So there's many VIX. VIX is a measure of volatility. And you can measure volatility in one day, or you can measure volatility in 1 year. Today, 1 day volatility is down 25%. Why? Because CPI came out. The market was waiting for CPI. This is uncertainty. Why is the VIX 1 day 13.5 and not trading 9? Because we have a Fed announcement. Fed has an announcement on what they're going to do for interest rates. Right now, as you can see, not a lot of risk in the market. We're going higher as long as there's not a lot of risk in the market. QQQs, again, we have our line in the sand, LIT, line in the sand, one level above bullish, below bearish. You could see us getting above that line in the sand and then taking off. This is really interesting. I want to start here. So what do we have? We are looking at interest rates. Okay, and we are looking at the 2-year. We're looking at the 3-year. We're looking at the 5-year, the 7-year, 10-year, 20-year, and 30-year. Now, these are all the U.S. government interest rates. This is how much the government is going to pay if you want to borrow money for 1 year, 2 years, 10 years, or 20 years. Here is the 2-year. This is inverted. This is the 2-year yield well over the other yields. You'll notice that the 2-year is still above the other yields, but not nearly as high as it once was. Now they say when the front end is higher than the back end for interest rates, it's inverted. Okay, so if 2% yields are way up here and 30% are here, now this historically has been a predecessor to a recession. It doesn't so much look like it right now, but what I find very interesting is 2s all the way out to 30s is very, very, very flat. The next chart, the white, is S&P futures. So S&P futures is right here. Notice bonds spike, market goes down. But now we've had this gradual run up. What's interesting is the market continues to trade higher. It'll be really interesting to see what happens when they lower rates, because historically lower rates would lead to higher markets. But right now, higher rates, higher market. Who knew? What I'm trying to do is every day I'd like to share something going on in our community. It's been pretty cool. It seems like every single day we've been able to share 100% winner or more. So Tom here grabs his 100% profit. Wood here makes $1,000. Great for you. 72% profit. Boom, boom, boom. So way to go. Thank you guys all for sharing. But my favorite shares look something like this. Nice work, Advanced. Notice this is our unusual options activity. Peeling off some nice profits in this morning. 12-month subscription covered and just a few trades. This makes my day. Thanks for sharing, Jeff. That's really freaking cool. Let's talk about the CVOL. Now, the CVOL can be found on the Chicago Mercantile site. If you go to CME.com. Also, guys, included with this video, if you're on the mailing list at masterthantrading.com/live, we're going to be sending you out a 10-minute training all about the CME CVOL. So we'll be sending that to everybody. And I'll also put this video under the YouTube description to make sure you guys can find that as well, the CVOL training video. CVOL is a really valuable tool that's shared from the Chicago Mercantile Exchange, and it's shared free. We're looking at natural gas because right now, natural gas is in play. This is volatility of natural gas. So vol got really high going into 2023, and it's been selling off ever since. Natural gas gets a little volatile, comes right back down. Here it looks like vol is popping up once again. Let's see what happens when volatility starts picking up in natural gas. We look at things using relative value. Relative value, we also call these divergences. I'm a big believer that anything that you do in life, the next iPhone that you buy, you're going to compare it to other iPhones. You're going to compare it to other phones in order to make a decision. When you're trading, you want to do the same thing. You want to make a decision on what do you want to be long, what do you want to be short, and what do you not want to have any exposure in. So we have heating oil, RBOB gasoline, and natural gas. Right now, I'm looking at the futures, but you don't have to look at the futures. You could look at UNG, is an ETF of natural gas, and there's ETFs that I can't think of off the top of my head for heating oil and RBOB gasoline. But the game, guys, is waiting for these divergences to hit. Natural gas gets very expensive to RBOB gasoline. Here, natural gas throughout 2024 has just been getting absolutely crushed. Well, recently, look at this just gigantic move happening in natural gas. Natural gas is catching up. We're seeing heating oil catch a bid, RBOB gasoline catching a bid, and we'll also see oil catching a bid as well. But relative value traders are waiting until they separate. That's how relative value traders can pick up trading edge. UNG, you can see right here how UNG runs up to its expected move, sells off, it's right back to its expected move, closes within 75%. So for anybody who's long, you take a little bit of profit, and then when it comes off, you want to get back in. And here's another example using these CME products. Please watch that video. It's really, really valuable. I'm a big believer, guys, that education mitigates risk. If you want to work on your risk, work on your education. Heating oil against the entire energy complex. We're looking at something called skew. Skew is going to tell us Are the calls expensive? Are the puts expensive when you're looking at the options tree? So what we want to look for here is we want to see when they break down. When they break down. Look at this right here. The skew of heating oil broke down. And it broke down on June 7th. Really interesting behavior because we haven't seen activity like this on this chart going back, all the way, right? So when something like that happens, that's weird. That's unusual. That's like, what the fuck? What's going on here, guys? No surprising. Get back on my play from current slide. What you end up seeing is right here, heating oil goes way offered, and this is on June 7th. But if you go to the CME, you could see that, hey, sorry about that, guys. You can see the options are getting out of whack. The options are getting mispriced. That's what we can see here. So when heating oil is going lower, then you could see with that skew getting mispriced that the likelihood of us bouncing is pretty strong. So why am I showing you this? This is a creative way to look at these trades. This is free information. CME.com provides for you. And in the attached training, it's a 10-minute training on how to use that CVOL to find great trades. Something that we use awesome, and hopefully it's just another tool in your toolkit. Now, for everybody who's part of our All Access, we got some trades to go over. So I'm going to pull up the portfolio, and we're going to go through these trades because it's time to lock in some profit. For everybody else, I'll see you guys 11 o'clock Eastern time tomorrow. Later, guys.